This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look at the gold market now. Well guys, as you know probably, the gold market really stands in a tight range on the recent couple of weeks. And in a short-term perspective, we have almost the same situation as we have discussed in our recent weekly research on the euro currency and Swiss franc. Because here we also have some a bit contradiction moments on the daily chart on the gold market. In general, guys, many analysts tell about some exhausting of the bullish power, the short-term bullish power on the gold market. And although many of them still expect to see the reaching of the 1370 area in the medium-term perspective, but right now, as market has failed twice to take out this resistance at 1335, many analysts tell about possible retracement to the 1295, 13 even area. That's an area that we also expect to see. And to be honest, there are some other moments that suggest this possible retracement. Another moment is reversal swing. So you see that this move up is greater than recent move down. And very often after significant move up, market shows deep retracement. This deep retracement will be probably to this area that we have discussed previously. Well, also on the previous week we have expected to see some reversal pattern on intraday charts. That's particularly speaking the head and shoulders. That could trigger this retracement down, and you can see that the very large part of this pattern already has been completed. So we will see it on the 4-hour time frame chart. But right now, take a look what we have. This is the bullish stop grabber pattern on the daily chart. That suggests some upward continuation, and at minimum target, at least market should take out of this high 1335 area. Who knows, maybe market will stop right here and take out of these highs and turn to the downside. That could happen. Maybe this grabber will fail. That's also possible, but this grabber stands opposite to the possible head and shoulders, because the market mechanics, the logic of this head and shoulders doesn't suggest the move above this top. And despite the moment and the opinion of the other analysts that see some bearish signs in the very short-term perspective on the gold markets, that gold market a bit overextended to the upside, and that is particularly also could be seen from the really moderate, limited reaction on non-farm payrolls release. No significant plunge down. Yes, the first reaction was significant, but later market has pulled back for the half of it. That's not really a reaction for as solid non-farm payrolls data as it was. So that also points on the sum. This market a bit tired from this upper reaction, and reaction down could follow. But actually, we do not have any signs that could confirm this. Yes, we see the patterns. We see that here market could form the bottom line. Here market could also has formed the stop grabber. But from this situation, it's very difficult to say definitely what will happen. And from that standpoint, we probably will have to watch for a couple of moments. The first moment is watching for creation of this head and shoulders. Continue to watch for it, because you can see the left shoulder in place, head in place. Here we could get right shoulder, and after that market should start move down. The one reason how market could complete this pattern I see with this butterfly. So here you see, guys, that market just has reached the 127 extension, but it could continue, say to 1618 extension. In this case, market will complete the stop grabber target. And this is still possible, although even this retracement to the downside is too extended to call it as just a retracement after hitting 127 target. So it's really too deep. So you can see the situation a bit tricky and not absolutely clear. And that's why the second moment that we will have to watch for is this low, because that is invalidation point of the stop grabber. If market will take it out, that will tell us that probably retracement has started to down to the downside. We probably will see the retracement of the 1295 area. Unfortunately, we can't say any more on the current situation on the gold market. So we have some bearish signs, and the moment that market stands below this resistance for this 2 week in a row also points at some barriers, some inability of the market to pass through it. But clear confirmation that appearing of this grabber makes the overall situation tricky and sophisticated, and we can't just ignore this picture. That's why we should take it in our consideration. So that's why we will have to wait the clear confirmation. So if it will be moved down, we need to get this pattern, we need to get the amount of head and shoulders, and we need to take it out of these lows. In this case, we could safely we could say that yes, market is ready to show the move down. If this will not happen and grabber will hold, the market will even try to make move to the upside, well, that will be not quite logical from the perspective of this pattern. In this case, yes, we probably should suggest that market could move at minimum above this top, and what we will do after that we'll see. So we need to see in this case how market will respond to resistance, and whether it will be just short-term move up, taking out of this highs, return right back down, or market will remain and will hold above this top and will make a challenge on possible further upward continuation. That's also possible. But current situation is tricky, and probably in the beginning of the week we will have to just watch what will happen.